Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, today again we will take a look at the euro currency because it's really market right now is preparing for a non-farm payrolls release. It's nothing really going on interesting. So on the Canadian dollar setup that we have discussed last week, and it's probably still stand since as the crude oil market is the Canadian dollar still stand in the tight range, market a bit lazy, nothing drastically has changed. On the other currencies, on the Japanese yen section is too fast, and it probably needs to be updated on the higher time frames, on the weekly research maybe, because on the daily charts no patterns right now has been formed, and it needs some more detailed analysis to understand some maybe targets on the Japanese yen or something of that sort. On the Australian dollar, it seems that market is forming something that has some similar shapes to the New Zealand dollar. Some kind of maybe hand shoulders on the 4-hour time frame chart. It's preparing for a non-farm payrolls release as well, but nothing really special. That's why, guys, today again we will take a look at the euro currency, because here at least we have the clear pattern, we have clear targets that we're watching for, and we will update the situation step by step to understand how market behaves, what has changed since our recent discussion, and just control whether it's everything according to our expectation or not. So on the daily chart, we see that market is continuing to move down, although this is actually not really fast. But today, later in the session, we will get the ADP report, and it will be some approximation of the non-farm payrolls release. If it will be positive, the market right now expects on the ADP approximately 157,000. So if it will be positive, then we probably could get some more acceleration down today. But currently, technical picture stands normal. So after this plunge down, market has shown 50% retracement, has formed bearish grabber that we have mentioned, and that has become the foundation of our short-term analysis. So we mostly stand in relation to this grabber and of course to this large ABCD pattern, especially on this fast CD leg of this pattern. We expect the market should continue move in a medium-term perspective, continue move to the next target that stands at 105.93, so 106 approximately, so 1618 will be here. But the current week, maybe in the beginning of the next week, it's depend on the non-farms. So if it will be really positive, probably we could get the target even on the current week. So in a very short-term perspective, we stand with the expectation of hitting the target of this grabber. The target stands precisely at these lows, so these lows should be taken out. That's short-term setup. Also, we here have a bearish sentiment, so we can see that retracement up. Market wasn't able to pass through the monthly pivot point, it's tested it, and turns down again. So this tells that sentiment here is mostly bearish as well. So in the recent two sessions, we discussed how we could take the position. So our first attempt was right at top, because if you'll take a look at the 30-minute chart, the butterfly has been completed. Second attempt we had discussed yesterday. So we said if you have missed entry here, don't be upset. Take position at the 50% resistance. So take a look, market indeed has reached this area, and definitely has tested this area. Weekly pivot point, also take a look, the market wasn't able to pass through the weekly pivot point. It's failed here and turned down. So that was the second attempt, guys. If you have missed entry here as well, it's no problem, because you could take the position based on this most recent swing. This market already shows retracement. This should be the downward continuation, guys, and you could take the position some minor retracement of this upward swing. Here you could decide what strategy to choose. So usually we use in such circumstances the Napoli framework, Napoli tool to entry in a moving market. and usually Minesweep A or B. Minesweep A, I just will not to translate you all background of this method because it will demand to describe all the situation. It's a bit long, but just will tell you that as the final point of the Minesweeper. So here you could just wait for minor retracement here and take the position on some fib level and retracement of this minor leg. Minesweeper B is almost the same tool, but it stands in relation to the confluence resistance. So it means that you need some kind of the ABCD down first, and then you try to take the position on some confluence resistance. So each of these methods has as advantages and disadvantages, but anyway, the core will stand the same. So if you would like to take the short position here, and you have missed entry here and in 111, so you can think about taking the short on this minor retracement here, maybe on this current leg. On the 4-hour time frame chart, what we have, yes, this breakout down. This market wasn't able to pass through the weekly and stands to the downward direction. So guys, currently I do not see any really problems with the setup on the euro currency. Everything moves as we have suggested. No surprises, at least no bad surprises. The good surprise, we like the good surprises. Well, let's keep watching what will happen. So we already have prepared for a possible downward action, since probably most of us will already have the short positions here. Just keep monitoring, and first of all, watch for ADP report later in the session. Be careful. Also, guys, for those of you who have taken position here, you probably could try to move your stop to the break-even already. That will just give you the more protection, and you just will be able to watch the movie. So since you could now shift your trade to the riskless one, you should manage your position and minimize risk as soon as possible. The market already has passed 111, 110.60, so 40 pips already has been passed. That's why you probably could try to take the stop order at the break-even point. So that's all, guys, for today. Let's see what we will get on the ADP.